All right, what's up, my friends? Wall Street Jesus here, obviously. I'm not gonna be able to ramble as long as I usually do. Feeling a little bit under the weather, lethargic. Started up Sunday. If you guys remember, those of you who remember Sunday, I was complaining. I was feeling kind of run down and felt like a cold coming on, and little by little, I'm getting there. So, probably gonna run out of saliva before I get through the whole webinar. So we'll keep it quick. We'll basically we'll get through some of the more important stuff. Stress. I have no stress, Gordon. Life is beautiful. You do. You must be married with kids then. So we'll get through some of the more important stuff. And you guys know pretty much. Again, we're talking to everybody on here, so welcome those of you on Twitter, social media, and stuff. But if you all remember, we went over a lot of the important stuff at length, okay, during the Sunday webinar. Those are recorded, so you can go back and use that as a reference to get the gist, again, in more detail of what we may discuss today. But if you guys were around, those of you on Twitter and so forth, if you were around the last free webinar or open to everybody on Tuesday, last Tuesday, you could probably sense the excitement in my voice of what was actually starting to take place, right? We never know. Timing is everything in this game, right? Obviously, that's the difficult part of this game. Especially when you're playing options, not only do you have to get the direction right, your timing's got to be right, right? And that's what makes things so difficult. But when we're following sweeper activity, I think that's where the edge of sweeper activity really comes in. Okay, it's not that every big bet that you tell you're going to cash a ticket. Obviously, that's not the case. It's not, finding a trade every day to make a nice hit off of. I think the true edge out of the sweeper front is getting tipped off to a major trend, right? A big change happening in the market. And what sweepers allow us to do, they're giving us a heads up that whatever we were looking at, hoping to happen, or positioning, starting to position for it to happen. What the sweeper activity tells us is now players with a lot bigger arsenal, right? With a lot more information are starting to see what we were looking at. Okay. And when you're paying attention, okay, when you're watching this stuff on a day-to-day basis, which most of us are, right? And if you're a member of this of the Steam Room, that's why you are a member, not even to watch it on a day-to-day basis, but at least I can point out to you some of these things that may be occurring. Okay, once we start to see signs of that happening, of a major trend change or shift or rotation in the market, that's where things can get really exciting. All right, and just like everything else that we talk about, right? We talk about the change in trend off a sentiment squeeze and how we love that, and it takes a lot of discipline to sit around and wait for that setup. All the best setups, right? All the quality risk reward setups in this game obviously don't come around as often as we would like, right? That's what part of the discipline at this thing. But when you're waiting for things, like we've been talking about this rotation for a while, right? For a long, long time, waiting to see signs of it starting to materialize. When it does, when you finally see those signs, that's where you have to and again, this is something we spoke about for a couple webinars now. You have to be ready to react. You have to be ready to take some sort of action. Okay. And it's not going to be any easier, right? Because we're always, think about what I just explained to you about sweeper activity. It's about being early. Okay. Not being late, not getting in at the perfect time, right in the middle, right? It's about being early. And that's our edge. Why? Because that's where you get the biggest bang for the buck. That's where, again, the best risk reward lies. That's not where the guarantee lies. Let me make that clear, right? But that's where the biggest risk reward lies. And we were talking about this. I was talking about this amongst members this week, okay? And I'll give you an example of what I mean by that, okay? I don't know about you guys, but for me, all right, if I don't react when the flow is signaling for me to react, or at least take it serious enough to really start to pay attention, for me, I miss a big chunk of the move. Okay. And again, to clarify, let me clarify what I mean by that, right? I wanted to, you guys know, I've been talking about this rotation for a while, how we, in my opinion, we needed it. It was the only thing that could save this market. The software names were cooked. A lot of the hot areas were just too crowded to carry the market higher anymore. So we needed rotation into a big chunk of the market that's been ignored for a long time, right? So I've been eyeing this rotation and getting my hands on some of these cyclicals across the board, right? Not just one sector, across the board, okay? Especially banks, right? They're the most hated sector on the face of the earth. There's not one logical reason, there wasn't anyway, to make a play on the banks for a move, okay? So make a long story short, this is something I've been eyeing for a while. And I had a lot to do with earnings was the problem for me, that a flow was coming in around earnings season, and I didn't want to take the added risk of earnings, which now, if I look back at it, was foolish. If I was going to buy with time, I should have bought something. All right, but that's not the point. The point is that I didn't react and take action when I should have, right? Thinking, you know what? These financials are such dogs. They'll hang around. I'll get another opportunity. Even if I got to pay up for it, they'll still be around some sort of buy range. All right. And make a long story short, I watched these financials go up every single freaking day, and I still don't own any of those individual names. Right? Wells Fargo, those of you in the room probably know, right? I'm probably annoyed the crap out of all of you already. I want to own this Wells Fargo. I want to own this Wells Fargo with time. They got the new CEO now. This thing is, you're not going to find a better engine. I don't own Wells Fargo, right? The flows are and everything. So the point I'm trying to make is that it's always going to be difficult, right? When this type of play comes around, it's always going to be difficult to start buying these things over here, down here, okay? Right? When the signs of rotation, right? Or I'm talking about any big major shift in the market or change in the market, right? Change in trend. It's always most difficult to fire when you're supposed to, okay? But what I've learned from my experience is when I don't, okay, now my next excuse is, well, I can't chase this. Well, I can't chase this. I'm waiting for a pullback. Well, yeah, this is not big enough of a pullback here. You understand? It never ends. So for me, I find it so important that I have to be early. And that's why, a lot of you guys, especially those of you who are members, and I give you a heads up on that we're likely early, okay? but you at least need to be paying attention, because in this game, shit happens so fast now more than ever that if you're not ready, you blink, okay? If you really want to get your hands on this play, you're gonna have to chase, and you're never gonna feel comfortable, never. All right. So that's what we've been talking about now for quite a few webinars, right? For at least 2-3 webinars now, we focused on that, right? The last one talking about oil and how energy, it looks awful. And I'm sure there are going to be more and more days, right, in between where it looks awful. And if you're in them, you're going to think you're wrong and it was the wrong move to make them, blah, blah, blah. But the bottom line is, if you're not starting to look, right, if you didn't start to look last week at those oil names when they were catching the action and we were talking about them, now all of a sudden, you're looking at these names and you're like, all right, you got some rallies here where they started creeping away from you. All right, now do you want to chase? You feel like you're going to pull the trigger up here. You may have a down day tomorrow and you feel like you made the wrong move, so you hold off. And already some of these energy names have already, pulled away from you in a sense, right? Almost like the cat's out of the bag. Some of the other rotation names, the ones we were talking about initially, are already gone, right? Like Caterpillar. You see how quick that happened, right? URI, tree, you remember this thing we were talking about, how it couldn't get out of its own way? So it happens so quick, and that's why, that's where the edge is in the sweeper activity. It allows us to start to pay attention to these things early enough to at least get our hands on something, right? So I think now we're at the point where it's obvious now, right? You got Pisani talking about it. You got people on CNBC talking about it. The rotation is obvious out there, and for good reason. Okay, if you look at the banks, I mean, JP Morgan hasn't had a down day, it feels like, in a month. All right. So I think we're at the point now where here's where it gets tricky for us in these things, right? That's why when we were looking at these things initially, if you remember, we were talking about you have to at least try to get your hands on your favorite names in these groups, right? Even if you're nibbling, you just buy a little, you can add to it if it goes down or if it starts to run away from you. If you wanted to own JP Morgan, you have to get your hands on it now, right? This is what we were talking about a couple of weeks ago. We've been using that line a lot. So any of the cyclical rotation names that you wanted to own, if you see flow, especially into weakness, you have to get your hands on it, okay? I think now, obviously, these things are past that point, okay? You can't chase JP Morgan up here now, all right? It's foolish. So now, the trade in these things, right, from my experience is, when there's weakness, you can get a trade out of it, all right? So what I mean by that is, you see like here, right? This is not enough of a pullback here, all right? But because of the magnitude behind the non-exposure in these things, how nobody owns them, okay? The likelihood is these pullbacks are going to be shallower, a lot shallower than what we used to see, okay? So the trade is, if you see a down day or two and you see some sweeper activity come in, you're playing for that snapback quick trade. Okay, now that's different than what we were talking about, right? We were talking about buying JP Morgan down here and making sure you have enough time to really have a shot at that reward, right? So now with this, with all these things that have already hatched in a sense, now we're looking at these things more for trade off pullbacks. All right, again, in my opinion, what you want to see eventually, All right, and you may see it, you may not see it. The likelihood is we will. For another entry on this thing is some consolidation with a little bit of length behind it. Doesn't even have to be a deep pullback, just something like, let me see if I could go back just to give you an example. And that's where you would look at swings again, where you can give it a leash. I just want to see a rally in the past, for example. So, something like this, let's say. See, like this little breather here? Something like that. Or that, right? So that's the next step. In other words, that's where secondary entries are going to come from if you miss these things. Okay, if you're looking to build positions with a little bit of time behind it, right? Because again, that's where you can position for a decent size winner, right? If you're sizing up in weeklies and you're looking, for a triple or quadruple, and that's like your realistic target, you're not going to last too long in this game, right? We spoke about that. So realistically, if you want to make a decent hit with options, the likelihood is it's going to come from something you size into and you give it some time to marinate. Right? The whole Jesse Livermore thing. The money's made sitting. Right? That's where the bigger money's made. Sitting, not buying and selling. That's not where big money's made in this game. So that's where we are now on these things, some of these industrial names, anything that were the first to react out of here, right? You've even had names. How far back did I go? That's the last time I had a rally, like a GT, right? That's already a little bit stretched from where they started hitting it. All right. So what I think now, if you're like me and you're uncomfortable playing these things from this point with time, I don't mind trading these things. I can be quick, all right, but I can't buy right now JP Morgan up here and go out 6 months. Right? That's what I'm uncomfortable doing up here now. So if you're like me and you're more comfortable being a little early at the bottom, but at least that's the starting point. I think the only thing left out there right now that's close to that are commodities. All right, and I'm not talking commodities in general, and I'm talking commodity stocks. Okay, we already have been seeing some of the larger commodity names do well, start to push higher. Okay, so they already started to react. But what's going to happen eventually, they are going to sprinkle down into these mid-tier commodity names. I don't know if you guys have ever been a part of this type of rotation in the past, but what usually happens, a rotation of this magnitude, they trickle down into some of the mid-tier names, and then eventually the bottom of the barrel, the crap that hasn't moved in ages, that you wouldn't think of buying over the last couple of years, that will even see monster short squeezes. All right, so the point I'm trying to get at here is, if you're like myself and you like to be early at the right spots, then being patient or chasing and that sort of thing, that's where right now we need to keep an eye on, especially in commodities. Now, it could even come in, it doesn't have to be commodities. It could be that flows trickles down to just mid-tier cyclical names. All right. But the point I'm trying to make here is that everyone's going to be drawn to the bigger names, right? They're talking about on CNBC. Everyone's going to stare at these names, and these names may tread water a bit, right? They may even go higher, but what you may see is JP Morgan up a buck, turns red, and everyone, here's an example. AMD. You saw AMD today? I looked at my Twitter feed. I get AMD players who I guess were long AMD were suicidal for some reason. And then I looked at the stock and it turned red. Okay. So you're going to see a lot more of that. Why? Look at this. Okay. So that's why these things become more difficult this late into a rally here. Right? They get tired. At first, like in these rotation names, you had no ownership in these things, so there's nobody to sell them. Now, you have some selling from people who are just trading it, profit taking, right? So, a lot of people are going to make a big deal out of this. Oh, a Long Island iced tea reversal, whatever the term, technology term they put on it. But the bottom line is this is normal, and it'll likely continue like this until some sort of consolidation or breather comes. That sort of thing. All right. So what I'm looking for now, both for trades and stuff to tuck away, all right, our names are better at better spots. Okay. If I like the name just for a trade, I'll trade it. What I've been doing, I've been trading more on the equity side. And then if I want to tuck it away, I start buying some calls with time. All right. Because what I want to do, I told you guys, I want to buy everything I'm buying to hold. I want to buy options. I want to take advantage of it with calls. Okay. So I'm trading the equity and I'm buying calls away with time. So I'll give you guys an example. Two names we saw. I actually had a pretty good past week, obviously. This is my cup of tea, this action. But like you see this thing here? All right. So this COLM retail name, Columbia Sportswear, right? Retail sort of fits into that rotation type category. So this wasn't something I really was junked up on to put away, tuck away, okay? But it was really aggressive action, as those of you who are members are probably aware, because I mentioned that. And it comes in at a nice spot, right? Right at a 9er down here. Looks a lot different than JP Morgan and the other rotation names, right? Very different. So you see the difference? Like, here's the spot I like. And I'd rather be early. So this I decided to trade, and I actually got out of it today. Okay? Took the pop and ran. I'm not looking to hold. So no matter what I'm trying to get across to you guys is still this rotation theme, but now the names that we were eyeing, the leaders, right? We wanted to make sure we got our hands on leaders because they were so cheap and underowned. But now they've been noticed. Okay, so our full edge is not there anymore. If you own them with time, you should hold on to them, right? I'm not saying sell them, but I'm saying as far as new entries and buying them here, it gets a lot more difficult now with more eyeballs and obviously extended price action. So that's what I'm looking for now. I'm looking for action to trickle into some of these mid, smaller tier names, especially post earnings, right? Especially post earnings. And that's what I'm going to focus on as far as short-term trades and longer-term trades. Okay. And it doesn't have to be small names, right? Here's another one. Okay. It wasn't set up as good as this, but the action was better in my opinion. And couple of us got screwed on it today, right? So you guys making comments here. WBA, right? So right here, action starts to heat up. Okay, they really were coming after upside calls in this WBA. And, fits the rotation bill. They were even CVS has been catching a lot of solid action. All right. So again, this was something I wasn't excited about putting away. It's not as beaten down as some of the rotation names, but I felt it was worthy worthy for a short-term trade. I bought some equity. I sold it this morning into a pop. And then obviously in the afternoon catches a halt and news and explodes to make me sick today. But again, you see the premise I'm trying to get at here, right? They don't have to be, when I'm talking about trickle down, I'm not necessarily talking about trickling down into micro cap type stocks. Okay, there's a lot of market out there that hasn't participated, a lot. All right, and they haven't all been noticed yet. It's mostly the bigger names that have been noticed, as far as the rotation type names. But anybody have any questions on this? I know Ryan, you were thrown for a little bit of a loop the last time when I tried to explain that whole U.S. steel compared to the overall market um, comparison I was giving. But do you guys follow me here as far as what to keep an eye on? And here's the beauty of it. All right, the beauty of it is that sentiment's tricky right now. It's really tricky right now. Okay, you got put the calls out there that are scorched, right? The total put the calls are scorched. I'm hearing the price of puts are starting to really creep up, which means that players are already starting to buy protection out there because it's been so cheap. All right. Some of our short-term indicators are basically neutral, right? You look at CNN fear greed, that thing's really hot. But there's a reason there's a lot of mixed signals out there. Look underneath the hood, look what's going on. Not everything looks like JP Morgan. You got, tech names that have been shit in the bed. These things, they can't find a bid, these software names. All right. You got a group that was a leader throughout this whole thing. Utilities starting to bleed away a little bit here. So sentiment could get really, really tricky when you look too deep into it in this type of market, in this type of rotation. So when you see sentiment on the warmer side, right, which is, we could put that in the category now. What my takeaway is, be careful on the things that are stretched, right? That's what my takeaway is. And you don't even need sentiment to tell you that. But basically, that's my takeaway. That some things out there, some pockets out there are, stretched too much. Because what you could easily have happen too, and there'll be money to be made, as far as trades I'm talking about now, while some of these hotter names, cool off a bit, tread water, sideways, whatever the case may be, money may rotate, like it did today, into retail or some other group. So you don't want to put the blinders on and, be shut out from other opportunities that may be going on in the market. We waited too long for this rotation. We waited too long. Yes, Tree, Kalanovic, basically he started to backpedal a little bit, but what he was saying is there's a lot more downside in these software names just based on positioning. In other words, people are still trying to buy the dips in these things, right? So usually these things don't get washed out and done until people have given up on them. You understand? This is not your run-of-the-mill pullback. I told you guys in 1998, okay, a lot of it was like the semiconductors, it was tech. A lot of those names came down 50, 60% off the highs before they bottomed. And then eventually rallied to new highs. All right. But the point I'm trying to make is they really, really needed to get completely washed out before those things found a bottom. So, you still have players trying to pick a bottom in these things. What's the average software name down off the highs? I know some more than others. Roughly, anybody have any rough figures? I haven't really followed any of this stuff because I'm not even paying attention. Yeah, pins, those are the IPOs. That's another whole can of worms, That's a whole other can of worms, the IPOs. But you still have other groups that haven't popped. Remember we were talking about, we got utilities. This is going to be the big two: utilities and treasuries. When they go kaput, that's when things can get really, really frisky. Again, it might weigh on markets initially. It wouldn't surprise me if it weighed on markets initially. If you have software, staples, utilities, and bonds all really getting hit hard at the same time, I don't know. I've never been through something like this. I've never been through something like this. So it may weigh on the indices, but it could be a point where commodities and commodity names go in the other direction. That's Tree. That's another one, right? EEM. I mean, how many times have we been talking about it? I traded it a couple of times, Tree, but I don't have something where I'm just, okay, I have it, I am leaving it alone. I'm not even interested in selling, which I wanted to do. That's what I mean. Trades. Trey, you know what I'm talking about. You and I have this discussion on Twitter constantly. Trades, we're going to find trades no matter what, right? Some are going to be quicker than others. Some you could give a longer leash. An opportunity that you can tuck away and hold on to and have patience with, and cash a nice ticket. Those things don't come around too often, at least for us degenerates. Right? It really has to line up for us to partake in that. So, that's why I get pissed when, an EEM that I've been eyeing for a while and I still haven't tucked away any of it. But all these things, FXI, all off crashes. And now here's, right, you face the dilemma again. What do you do here now? EEM, the June calls today in EEM had enough volume to kill a small village. Okay, there was like 150,000 of those June calls today bought. What do you do up here now? Oh yeah, hold. That's all this stuff, guys. I recommend you hold. If you have the right entries on these things, I recommend holding on to all of it. There's not one thing, not one sign even close. We haven't seen anything to signal that you should take your profits and run. Not one thing. Not one thing. And they're going to be down days. We gotta prepare ourselves for that. The stuff you're long, you don't want to get shaken out of. And even more importantly, we want to find stuff to buy. That's another Kalanovich play, that XOP. He thinks there's huge upside here. Huge. Basically, again, if you look, when you were on the Sunday webinar, we were looking at the ETF positioning trade. Remember, energy is still at zero. It's still at zero. The financials, I think we're in like the 20-something percentile. So they basically have come off the basement. energy still these quants have no exposure to. So this is nothing. This is, we haven't seen anything yet. Like when this heats up and they need to own it and it's starting to get away from them, you're going to see moves like we saw in the banks here. Not just up a couple of days. That's the whole point, guys. You know what I mean? That's the potential in these things. I think a lot of you guys forget what we're trying to look at here. These are not trades. You're doing yourself an injustice if you're looking at this stuff as just a trade. You understand? We have trades. We'll always have trades. Sometimes we got to stay a little more patient, right? But there will always be stuff we can trade. This is for more than that, right? This is buying when nobody has any exposure to them and trying to hold until a decent amount of exposure comes back in. That's what you're trying to do here. That's what you're trying to do here. The timing of it, you want it to take time. You don't, it's not gonna, you're not gonna make a hit like that over 2 days. And again, you can make quick hit, you can trade these things. Don't get me wrong, we're gonna trade them too. I've been trading them. I'm sure you guys have. But what I've been referring to, and I know, there's quite a few of you out there who don't have the luxury of being in front of a computer all day, right? Don't like to be in and out of stuff quick because you can lose money. This is the type of stuff that you look to piece into, right? To buy into weakness and give it time, right? And not be stressed, about every Trump tweet and every headline around it. Like today, right in the afternoon, you get a negative trade war headline again out of nowhere. You don't want to be concerned about that. Some of them, some of those names have already, some of those names have already exploded. Like this UTX. How about anybody get their hands on those choo-choo trains we've been talking about? UNP, CSX, NSC, even for trades? NSC, yeah, that's a nice one. They move. They all move. Oh, the calls were 2 times? Real nice. Real nice. So yeah, there are a lot of names. There are a lot of names to keep an eye on. All right, a lot of names to keep an eye on. You just want to be careful chasing, right? Even for trades, we want little breathers like this, right? I'll talk about for trades now too. Off breathers, right? You got 3, 4 up days in a row. They get tired. Let them get tired. Let some negative news come in. But at the same time, keep your eyes open to other things out there because there's a whole universe of stocks that hasn't gotten any attention. Let's look at some of these names today. The action wasn't too. Oh, how about this? Right? Who's gonna buy this? This is right up there, probably with the best action out there right now. GE. All right. They hit this thing all day, short dated, leaps, further out, you name it, all damn day since the day before earnings. Like, look at that. GE. All right, but that's the poster child for these stocks. Nobody wanted to touch this thing for God knows how long. All right. Drunken Miller? No. Oh, yeah, that's right. Son of a gun, Joe. I forgot about that. He took a position, didn't he? I forgot about that. Yep, I think Drunken Miller, I think you're right. High sevens. Jesus Christ, Joe. Jesus Christ. So yeah, today you had March 7s. Obviously in the money, Langwood. They're hitting everything though. They're hitting everything. Leaps next year. Short dated ones like here, December 6th, $11. You name it, they've been hitting it. This name here, UAA, caught some dated action today. I know they had negative news, right? So down here, they caught UAA had leaps and some Aprils. The best looking order in UAA, to tell you the truth, was the leaps. So I don't know if anybody's interested in buying leaps in this thing. I guess it would fall in the category of potential rotation under the retail sector. All right, here it is, Jan 2022. So not even 2021, 2022, $30 calls. $2 million sweep. And then there was action like this April, some smaller action, not too small, but bullish action today in UAA. Something to keep an eye on, even for a trade, something to keep an eye on into any weakness next couple days or so. Let's see, any other interesting name? This is out to June, RESI, but they have earnings, I think today or tomorrow. A couple of regional banks, and they've been catching action for the most part with the KRE and stuff. AALLY, you can see the turn already in these things. You know, not as sharp as the major financials, some of the major names, right? But you can see they're turning here. I never have been a big fan of these regionals. I don't know if you guys like to trade them. I almost, like, look at this one, caught fire already, RF, and they hit it again today. It's almost like, I don't know. I don't get excited about them. You're better off just buying the ETF, I think. And that would be KRE, which doesn't look too shabby, right? Again, breathers, right? It's up 3 days, maybe it's up again tomorrow, whatever the case, and look for the, you know, little things like this. They may not even be as deep, but if they are, they are. And wait for some sweeper activity into that. Boom. And that would be where you would pull the trigger if you're interested. By the way, ETF players out there, XBI, which has already been seeing some nice action, as you guys know, and IBB saw some action recently. Caught a really good looking March bet. You guys see that? You steam room degenerates? Caught a nice March sweep, XBI. Yeah, and nice little upward grind off that niner, running through red niners. All these things have blasted through red niners like they didn't even exist. There's bigger forces at play, guys. Bigger forces at play. But XBI, yeah, the Fed and no exposure in these things, Tim. Nobody owns these things. You know, nobody owns these things. What else we got on here? Anything else? This LOGM, I don't know what category this falls into. Log Me In is the name. I have no idea. It was a nice size bet though. Software? It doesn't look like software. Oh, it had a run back here. I didn't even see that. Wow. They beat this thing up pretty good. I mean, personally, I would want to see more, but if you guys know the name, like the name, you got to chase it a little bit here today, though. Yeah, you know what I'm gassed up on? You guys know. I want, for the longer term stuff, I want to, like, I'm trying to stick commodities right now. Like, I think if things fall into place, and they have been, right? This is exactly what we were looking for to happen. And you get like that fear bubble popping, right? And then you got reflation taking place out there. So in other words, utilities pop, treasury, bond proxies pop. I think commodities are going to get so hot that words don't even do it justice. You know, so that's kind of like where my focus is. And that's the thing, Tree. Like, I don't want to be predominantly energy. You understand? So you hit the nail on the head. Don't get too hung up on energy. You don't want to just make a straight up energy bet. Copper, Tree, is the other one. So that's FCX, and the one you mentioned on the webinar. Yeah, SCCO. Exactly. So remember, copper tech is another play. Yep. I'm in FCX Junes. So, and remember the Sharpie, the commercial hedgers that we take a look at. The only bullish bet they got on is in commodities. Isn't that interesting, Tree? That they've been buying that for the last month or so, dead? Yeah, Ranchero. I stole your idea. I've been giving you credit on that SCCO. So yeah, the copper trade is really interesting because smart money's been building a position down here for quite a bit. But that's the way they roll, you know. That's the way they roll. They'll keep buying and buying and buying while it's dead. I mean, look at like gold, right? They kept shorting and shorting and shorting into the highs here. So that's the way they roll. So yeah, copper, Alcoa, I own Leaps there too, Tree. And there are so many underbelly play under the hood type plays. Yeah, like these are the some of the bigger names. You got so many, like we were saying that tech. I would definitely keep an eye on this tech. Caught a little bit of flow today. When they come after tech, they can hit this thing hard. You guys know we traded it a couple times. This time it might be for real though, this move. I think this is zinc, right? And see what I mean? You see this here? Like we forget, not just us, everybody, like, these things ever could move like that, when they come from out of favor. Like, you know what this move is? Okay? 2 to 25. Okay, no, how about this? 2 to 30 if you wanted to sit through a little consolidation. 2 to 30. $2. Should I repeat that? $2 to 30. That's what happens when they officially rotate back into things. And it's normal in these commodity things. It's normal. It's cycles. That's how they go. You know, so that's what my gut is telling me, that the commodities are going to be the last to go. You know, they may participate a bit, but the last to really catch fire. We'll see. We'll see. I think when this finally goes kaput, you know, kaput means you get some. It's hanging in there. TLT's hanging in there right now. You know, you see that stock bond ratio chart we look at, right? Creeping in the direction. When we see that spike, I think that's when things start to get frisky out there. And it might come off a breather in the markets, a little bit of a breather. You know, we'll see if we ever get that. I mean, this is a little ridiculous here. Jesus. So yeah, and the flow, we'll see all the flow, Tree. We'll see all the flow. They'll start sweeping the spec commodity type names. Again, it's all about paying attention. I can guarantee you that 99.9% of the riffraff is not going to pay any attention to the price action in that stuff. No way in hell. You know, they're consumed with you know what names constantly. Yeah, they're trading, you know, they're trading shop and all that stuff. And, you know, and you'll see, like right now, they're not, I don't think they're getting involved, but they're hearing about the rotation out there, right? So they'll pull up like a JP Morgan. You can see they're talking about it on the halftime show and stuff up here, right? So they're like, oh man, what's going on here? You know, so they start to take notice. So then when they start to take notice, what happens? This thing goes into like a little lull. And then they're like, oh, these freaking banks. I knew it. They suck, these banks. All right. And then they turn their heads, and that's when, bing. So I think that's where we're close to right now. You know, there's finally now, let's see if I can do this. There are a couple of eyeballs looking, saying, oh man, shit, rotation. Maybe I should have been paying attention. Yeah, we'll see how that translates. All right. Anybody else have anything to add to the whole scheme here? Yeah, Bank of America. They all. Have you seen Saeed? Have you seen Wells Fargo? Look at this. That's the one that bothers me, because that's the one I wanted to buy. The other one that I was contemplating buying, I couldn't find a line how far out I wanted to go, was the Berkshire Hathaway. Remember we were talking about that? Look at this guy. I think you technicians call this a major breakout. Possibly. Right? I think it's Luciano, I think it's more of a interest rate play, but I'm sure, you know, the Fed is involved as well. Like, that's the thing right now, that I think the most important things in this market, and if you're paying attention to anything else, it's just noise, and it's going to get in the way of something bigger at play out there. And those things are major rotation. Okay. Again, we've been talking about that for a while. There's been false flags and little rallies. Major rotation, possibly out of bonds and into equities for the first time in years. Okay. That's number one. Two, have you looked at the Fed balance sheet lately? If not, go do it. All right, because whether they want to call it QE or not, it's QE. So the whole don't fight the Fed, don't fight the Fed, right? The third most important thing is that, time goes by quick, right? If you think about, we had that December correction, the Fed was tightening and the market was in tailspin, and all these type names, these industrials and cyclicals and UTXs of the world, these things were being sold like they had a disease, right? And everybody was wondering why. And we were talking about it at the time. It was the Fed tightening. That was the reason why. Okay. Fast forward, they just cut for the third time. Cut for the third time. And basically said, yeah, that tightening and normalization of rates and all that stuff, that goes out the window. So we may not cut in December, but we're not going to raise rates ever again. That's basically what they said. So there are already signs that it's starting to have an impact on things out there, right? You hear a lot of people saying, oh, it may not work. It's working. And here's the beauty of it. It's just starting to work. Just starting. When the Fed cuts rates, it doesn't instantly poof have an effect on things. Usually 6 months, 2 quarters, around then, you start to see the results of it. So that's all here now and coming. So what I'm getting at is you get that reflation trade put on, all right? And the significance about that is if nobody owns commodities, nobody owns industrials, nobody owns equities, nobody owns banks, the reflation trade is to have full exposure into all those things. We're coming from no exposure into any of those things. They're in bonds. They're in utilities. They're in staples. That's a lot of money that has to go in the other direction. So that's all that matters right now. That's all that matters. All right. So you don't want a melt up here. You don't want that. That's the worst thing that can happen. You want dips and little pullbacks off impeachment, off anything that can make a dent. And the likelihood is we're going to see sweeper activity into it, just like we have been. I mean, flow has been a completely different animal. Completely different animal. So that's the story. So that's why, I'm not trying to be rude when, some of you guys are asking me about, do I think shop can bounce and shit like that? It's not important right now. You know what I mean? Like, that's the stuff we're paying attention to when we're grasping at straws to try to find something in this game. No? That's what we're trying to do when there's no flow. Or they're buying FANG and software 6 months deep, 50 call sweepers deep, up at new highs. Yeah, exactly. The big picture. Exactly. You hit the nail on the head. Yeah, it's been, Gordon, it's been, there's a reason why money's been coming out of equity, right? The fund flows have been coming out of equities and going into bonds for 2 years and going into utilities. you had a lot of stuff up against it. You had the Fed tightening and you had a trade war. Nobody wanted to own stocks. Like, look at these Utes. These are utilities. You see, like even the staples, Procter Gamble, and all those guys, they're trading at like their Yahoo.com back in the day. So when money comes out of this, all this stuff, they're going to rotate into all the stuff we're talking about. But it doesn't mean we want to be stupid about things either. We just, like you said, Luciano, you got to have the big picture in your head. You know what I mean? In the back of your head of all times. And then you have a playbook. You have a game plan on dips and stuff like that. Because there's going to be, I can promise you, the likelihood is, right, as good as everything sounds here, I can almost guarantee you, I promise you, okay? And remember I'm saying this because you're going to need to remember. There's going to be a headline or some event out there that sounds awful. It's going to take stocks lower. Everything we just discussed on this webinar and all the other webinars is going to look completely wrong. It's going to feel completely wrong. And, that's where we have to remember all this stuff. Now, while they're all going up, it sounds great. It's easy, right? You must feel like we're going to SPX 4000 by the end of the week. And I'll give you again, we have a blueprint, the semis, right? Zich and I, you guys know Zich in the room. Zich and I cry about it every day. All right. The semis coming out of that December correction were the ugliest thing you can ever find on the face of the earth. Okay. They started to catch sweeper activity as they were going into what was going to be their worst quarter ever, fundamentally. Okay. Their earnings were abysmal. They reported awful earnings. The stocks went up. More flow came in. The stocks continued higher and higher and higher, right? Okay. And then what happened? The unthinkable. Trump breaks the Huawei news that he's cutting Huawei off from all these chip makers. Can you imagine? Right? That's the worst possible news you could draw up. The semis could get hit with. Okay, but they were scorched at that point anyway. They started coming in. There was some profit taking. And then what do we see? Sweepers start to buy them again. How hard was it, though, for us to buy into weakness into that Huawei news? It's not an easy thing, right? Remember the TSM? They were annihilating. Here it is, right here. This is the dip off Huawei. Red Niner, Huawei news, pullback, green Niner, risk reversals, Jan sweeps, one after the other, after the other, after the other. Rocket. So there's your blueprint right there. That's the blueprint. The semis are the blueprint. Why do I say the semis are the blueprint? Look what happened with the cyclical names. Okay, they were going into the worst quarter. Same thing. Earnings were going to be abysmal this quarter. Remember everybody talking about that? And guess what? They were abysmal. But what do we see? We saw flow prior. We saw flow after. More importantly, Caterpillar announced an awful number, stock went up, right? URI, stock down in the aftermarket, up 8 by the open. So same playbook. Same thing. So the same thing, now they're going to reach a point where they get stretched. You know, there's going to be some negative news. Hell, you know, I thought we had one with Trump this afternoon. But, you know, there'll be something, impeachment, anything. And you're going to start to see these things sell off and some profit taking from whoever got in recently. And that's going to be the key right there and then when we start to see flow into these things again. It's not going to be easy, but that's where we got to remember everything we're talking about today. Yeah, that ON came back with a vengeance, C-Train. All these semis. That's what I'm saying. Even some of the smaller ones, like this TSEM, you know, that we weren't paying much attention to. All right, LSCC. How's that been doing lately? Anything? Back to new highs, almost new highs. No, anyway, but you're right, Luciano. It's the big picture. You know, you're not going to see the big picture tick for tick on a day-to-day basis, but you know, especially for you swing traders, you have to always, there's got to be that refresher. You know, and weakness, that's where the opportunity lies, you know, from weakness. The Twilios, see what I mean? Like everybody's fixated on this Twilio. No matter what I say about rotation, they keep asking me about Twilio. The problem, Scott, is that Twilio, everybody and their mother's sister's cousin sister owned Twilio. You understand? See this? Everybody who wanted to own Twilio, it got into Twilio. So the problem is now they're coming out of Twilio. It'll reach a point eventually where it bottoms. I'm sure it's a legit company. But when they're still rotating out of it. You see, and listen, that's what a lot of people don't realize. Twilio as a company fundamentally can be incredible. That doesn't matter. These companies are reporting good earnings and still shit in the bed. It's all about positioning. And there was way too many people long these names. They were hiding out in these names. You know, if you want to talk fundamentals, I mean, what was the multiple Twilio was trading at its highs? I'm sure it was pretty lofty. You know, so just like when money's going into these names, they can trade at lofty PEs. When money's coming out of it, you know, they're going to ignore it, the fundamentals. Yeah, Tree, I'm telling you too, it's the most important thing. I'm glad you say that because it makes me feel good because it was the most important thing I learned too in this game. That it's the only thing that matters, Tree. You know what I mean? Sentiment positioning is all that matters in this game in reality. It's all that matters. Nothing else matters. If you ever wonder why stocks report good news and sell off, or a Caterpillar can report bad news and rally, or an MMM can tell you we're not even going to give guidance anymore, that's how bad shit is, and still go up? Exactly, Gordon. That's all that matters, you know? And it's at extremes where we could take advantage of it. That's where the edge lies, you know? You don't want to make too much of it. But that's all this game is. I mean, if you think about it, right? That's what moves markets. When everybody's already long, right? There's nobody left to buy. And when they start selling, obviously there's going to be a lot of selling. When nobody is long, there's no more sellers left. And if you give them an excuse and a reason to buy, there's potentially a lot of buying to come in. So I'm not trying to make it sound simpler than it is. It's obviously nothing's ever simple in this game in the heat of the moment. You guys know that, but that's all what it comes down to. Everything else, I'm not going to say, I take that back. I'm not going to say it doesn't matter, but everything else is secondary, I'm not saying it's useless, but everything else is the sprinkle and cherry on top. It's all about positioning. And that's why some of the top analysts, they're not even analysts, but top handicappers in this game all, follow positioning. Yeah, I spoke about sentiment a little bit earlier, Scott, but just quickly to touch on it, there's some mixed signals out there because of the rotation in the market. If you look at, like, a lot of the sentiment stuff is going to be on the hotter side because you have the overall indices that look like this. Okay. But you can't apply the overall sentiment of, let's say, the S&P 500 to, names like we just spoke about, names that are trading off the basement floor. Those things aren't at bullish extreme. So, you gotta have an idea of, I understand it's a little more confusing, a lot more confusing than normal. We're used to a market where you can look at a sentiment indicator and it applies to everything, mostly everything, because everything moves with the market basically, right? But that's, now that's not the case. You got stuff that is barely up off the lows. If it catches sweeper activity and you're interested, you don't want to look at overall sentiment and say, it's a little too stretched. That name's not stretched. So, it's just something you want to take into account here, But I'll leave you off on this and then I'll let you guys go. If you're bullish at heart like I am, the last thing you want is a melt up. You have all the makings for a melt up here. All the makings for a melt up. Gamma, 2 billion strong, no exposure in the stuff they're going into. Yeah, all the makings. But that never ends well. It's fun, for the short term. But, the end game is never a good thing. So if you're bullish at heart, you want that wall of worry. You want that, those pullbacks where people think it's over and the bull market's done and boom, they get squeezed. You want the bears involved. There's nothing better than when the bears are engaged. And then potentially what you guys are saying, eventually you can actually have a full-fledged bull market where there's a lot of participation. Think about that. How foreign does that sound right now? Meaning where software and growth names trend higher, as do financials. that happened before, in bull markets. That happened quite often. It's not one or the other. In bull markets, it used to be the banks would go higher, so would high growth. So eventually it may lead to a healthier rally, a healthier bull market overall. Nobody's looking for that. So we'll see, one step at a time here, one step at a time. Yep. So right now, again, right now, the outlook here, what we're looking for, some of the stuff that has rallied significantly that we've been talking about the last couple of weeks, you want to be a lot more selective there, more tactical there, play momentum, a little different than what we've been talking about, and just look for, better setups, names that are, set up a little better where they haven't moved yet. At least that's what I'm doing. Until things start to mellow out a little bit, consolidate, and then we'll reevaluate at that point, But so far, so good. Listen, everything that we've been talking about over the last couple of webinars that we needed to see happen, that we wanted to see happen, they're all falling in line. No, Tree, where are you? Everything everything that we were hoping that needed to be done for this rotation to take place, it's all coming along nicely, knock on wood. So we'll take it one day at a time here, and again, just pay attention to the clues that our signals provide on a day-to-day basis. Yeah, exactly. There we go. I just opened my mouth. Yeah, and just the overall market, I don't want to get too mumbo jumbo on you, but a lot of you follow it more as well. You got Gamma at almost 2 billion. And when you have Gamma at 2 billion, this is the type of price action you're going to get. You're going to need, they're going to need to move around Gamma to get this market to loosen up and some volatility to come in. There is no way this market is going to move much with Gamma sitting at 2 billion strong. There's no way. It's impossible. So right now, going into today, 3,100 was kind of like a ceiling and may also play as a magnet. And things were to loosen up around 3,000. That's where, if you happen to get some sort of catalyst in the market, start to sell and trigger below 3,000, you'll get a huge pickup in volatility. Huge. So some things to keep an eye on. All right, guys, enjoy the night. Thanks for stopping by. Good luck the rest of the week. And I'll see most of you mañana. Which ones, David, which ones? Message me on Twitter, David.